What's up, guys? Welcome back to the channel. This is Timmy Solomon of Wisdom, aka Born to Trade, and in today's lesson, I'll be covering trend continuation using order blocks. How to take advantage of the market's current trend, trading it in combination with other smart money concepts, especially identifying your key order blocks. I'm going to help you understand the right trend to trade and the order blocks to select as well. And if you are struggling to understand order blocks, I'm going to help you understand it in today's lesson. So quickly, if you are new to the channel, consider subscribing to the channel, drop a like on the video. I'm Solomon of Wisdom, and here is Born to Trade. Over here, we talk about smart money concepts and how you can make money from the financial markets using smart money strategies. Okay, so if you're interested in concepts like this, do this quickly, subscribe and like the video. Let's jump straight into that. So we're going to talk about the trend. I said the trend is your friend. Now, what is the trend? The trend is simply the current direction of the market. If you see something like this in the market, this simply means that the market is in an uptrend. Understanding the current direction of the market, this simply means that price is trending up. And how do you identify an uptrend in the market? An uptrend is identified when price prints series of higher highs and higher lows. So let's go ahead and identify these things. If you look at this current area, this here is your higher high. Now the price pulled back to the downside, this is your higher low right here. And how can you confirm that we are still in an uptrend? When price moves and close above the higher high, then a new high has been formed. This is the new higher high, and we have a pullback. After the pullback, this is price printing a low right here, which confirms the higher low. So when you see something like this simply indicates that price is clearly in an uptrend. And what is the best thing to do? The best thing to do right now is to try to select the order block that aligns with this trend. In this case, you won't want to trend reversals. No, trending in line with this trend is actually going to be the best thing any trader will do, because most times when you try to catch reversals, it might not really play out. Yes, sometimes you see me trade reversals. I trade reversals a lot of time, but the truth remains that trading reversal, it's very risky. I usually tell my students as well, it's risky to trade reversal. The easiest and the simplest way to trade smart money concepts using order blocks is trading trend continuation. So if you see price printing something like this on the price chart, this simply means that the price is in an uptrend. So let's talk about a downtrend if you're struggling to really understand what the trend means. Now, for a downtrend is identified when price prints series of lower highs and lower lows. So in this case, a downtrend will look something like this. This is a basic smart money concept, but I know why I started this lesson this way. So if you're actually struggling, it's going to help you understand it. So when price moves in this manner, here you see it printing a lower low and a lower high. So in this particular case, price prints a lower low, we have a pullback, and this pullback right here is confirmed by this lower high. Now, how are we going to confirm that price is continuing with its downtrend? It's when price reacts to the downside, breaking underneath this lower low, and not just breaking, because sometimes in the market you might see price spike underneath the low, maybe with a long wick, and moves back inside the range, because this is your current price range. Okay, if you really want to understand structure of the market, it's important you mark the price range. So this is your current price range. So one thing is, once price reacts from your lower high, moves to the downside and close underneath this lower low, then the new lower low is confirmed. And once this lower low is confirmed right now, what is going to be the expectation? The pullback. And once price pulls back, we expect that price is going to break underneath this low and print a new lower low. Okay, this is how we confirm a downtrend. So once you see price trending this way, a clear trend, this simply means that you should do what? Try to spot your sell opportunities. Try to find your order blocks that aligns with the sell. You can look for your supply levels in this particular case, because this confirms that price is in a downtrend, and the best thing to do right now is just to sell. Another thing you have to note is that trying to sell because price is in a downtrend, you're going to lose a lot of money. This is why we combine smart money concepts with the trend, because it has made me a lot of money. As a matter of fact, I have 3 examples I'm going to show you today, and these 3 examples, I will show you proof of when these setups were shared, and you see how it plays out. So I don't usually use manufactured charts to make my lessons. I like using real price actions, recent price actions. If you watch most of my lessons, 95% of the charts I use during my lessons are recent price actions. I hardly use annual charts. Why? I like showing you that what I'm teaching you is actually what I trade. So It's going to help you build confidence in using it. Okay, it's going to help you build confidence. So stick around. Let's continue with the lesson. Now, you've been able to identify what we mean by a downtrend and an uptrend. Very simple, basic concept. Another thing is sometimes we see some reversals in the markets where we identify when the trend is about to change, because price can never continue in one direction. That's why I said the trend will be your friend until it ends, because anything that has a beginning has an end. Okay, price cannot continue to move in one direction. Price moves from bullish markets to bearish markets. And don't forget, we have a ranging market. A ranging market is when price is in a sideways movement and it doesn't have a specific direction. So as a smart money trader, if you find that kind of market, I think you should avoid that, because it's not actually favorable to us. But people who trade support and resistance, that's a perfect market condition for them, and that is when they look to make good money from the market. But as long as you're a smart money trader, the best thing to do at the point where price is ranging is to disregard that particular market. We focus on trending markets. Okay. Now, if you want to identify trend reversal, how are you going to identify it? Now, in this particular example, price formed the lower low, lower high, lower low, lower high. What are you clearly seeing here? Price is yet to move above any lower high. We can only see a change of direction in the market when price moves above the most recent lower high. So where is the recent lower high right here? This is the recent lower high right here. And let's assume, okay, we had a pullback. Price continued lower, which shows that we're still in a downtrend, and then finally price reacts to the upside. Now, identifying the trend is not only beneficial to identifying trading opportunities in times of selecting your order blocks. No, it doesn't end there. It's also important in times of entry. If you want to use confirmations while trading your setups, this concept of understanding the market trend is actually very, very important. So in a case where we see price changing in its direction, sometimes we see new trade opportunity. Now, this is price moving above the lower high, because you see this was the most recent lower high, which was able to print a lower low. Now, this was another lower high right here. I hope you can clearly see another lower high, which was able to print another lower low. Now, after it prints this lower low, price continues and breaks above a lower high. So once you see something like this in the market, this is what we call a change in market structure. Some people call it market structure shift. So it's a very valid change in market structure once you see something like this. And once something like this is identified, this is when we start anticipating a possible change in the direction of the markets. A lot of things goes on in the market. We can start anticipating, okay, price will now start changing its direction. Okay, this is when we start anticipating the change in market direction. Price is now printing higher highs and higher lows. So if you're able to identify this, the next thing to do is to know how to identify another block. Yes, identifying another block is one thing, and identifying a valid order block is another thing. Now, identifying a high probability order block is something else. So this is what I'm going to show you into this lesson. I'll show you how to identify an order block, how to identify a valid order block, and how to identify a high probability order block. Believe me, after this lesson, you will see a turnaround in your trading once you apply every single thing you see in this lesson. So let me show you example of an order block. Here is my charts. So here is my chart right here. And when we talk about order block, an order block is the last opposing candle before an institutional move to the opposite direction, which breaks structure. Now, how can we identify a valid order block? We identify a valid order block after we see price printing an opposing candle, then moving with an institutional candle that breaks structure. So in this case, what I'm going to show you is what we call a bearish order block. Now, take a very close look at this particular candle. An institutional candle is series of candles. Now, in this particular case, we are looking for a bearish candle because we have something like a change in market direction. So we are looking for a bearish order block. And you can see we have an institutional candle, which are bearish candles. You see these black candles. The black candles is your institutional candle. What makes it an institutional candle? One, it was moving with big candles that has large bodies. I hope you can see 1-2 candle is enough. They has large bodies. Secondly, it has price inefficiency, and I believe you know how to identify your imbalance. So this gap right here and here, this is your valid imbalance. So this is a valid order block, and if you observe very well, it's still a high probability bearish order block. Now, let me show you what makes it a high probability bearish order block. It swept liquidity right here, and this makes it what? A high probability order block. It sweeps liquidity. And what do you know? Liquidity rests above highs and lows in the market. So price to the liquidity above this particular candle and drop to the downside, a very valid liquidity sweep. Now, one thing you know about the institutions is they won't want you to trade with them. So anybody that is trading around this area, you see price moves, took the liquidity around here and drops with an institutional candle. What else do you need to see before the order block will be valid? Price broke structure to the downside in line with this new trend, leaving inefficiencies. Now, what did I say is your order block right here? Your order block is the last opposing candle. So where is the opposing candle? You see this bullish candle is the last one before we have institutional move to the downside that broke structure to the downside. So you have to mark this candle as your order block. Now, while marking zones, there is what we call zone refinement. So zone refinement is of many types. We can decide to refine our zone depending on our personal preference. So I'm not going to teach you a specific way to do your refinement, but I'm going to do all these refinements as I teach you today. So you choose the way you're going to do it. You can either jump to a lower time frame to do your refinement, or you can still refine on that particular time frame. Now, when I marked this order block, I included the high of the candle, that is the wick, and the lower wick, the higher wick and the lower wick. But you can decide to maybe do some refinements, maybe marking it from the body of the candle and closing it at the high of the wick. Okay, you see, I included these bearish candles. I have reasons why I include that. Sometimes price might get to the level. So this is how to identify an order block. Very simple. This is a clear bearish order block. Okay, now it's high probability because it has other confluence. This particular chart, I will come back to it. Let's continue with the lesson. Now, let me show you an example of a bullish order block. Now, in this particular case, I hope you can clearly see the bullish order block we have over here. This is your bullish order block. Now, what makes it a valid order block? I said an order block is formed when we have an opposing candle before an institutional move to the opposite direction. Now, what can you see right here? Where is the opposing candle? This bearish candle right here is the opposing candle before we have that large institutional move. In this case, we have 3 candles, 1, 2, 3. Now, the number of candles doesn't really matter, okay? It could be 1 candle, it could be 2, it could be 3 or more. But what matters most is finding where we have large candles moving with large bodies. Those candles must as well leave inefficiencies, and you can see clearly that we have a very large inefficiency right here. If I want to mark my order block, this is where I could decide to mark my order block, this being my last opposing candle. But when I mark my order blocks, I look to include the whole week. Okay, I don't leave the weeks. These are the weeks I look to include that. Now, that is what we call zone refinement. So let's do some refinements right now. Let's jump to the 15 minutes time frame to see how we can refine this order block. Remember the first zone, I just did the little refinements where I didn't include the low of the week, but I included the high of the week. Now let's see how we can do refinements on the lower time frame, which is the 15 minutes time frame. So here is the 15 minutes time frame, and you can decide to do some refinements. But you can see on the 30 minutes time frame was actually a single candle, but now we have 1, 2, 3 candles inside that particular order block. Now you can decide to do your refinements based on your personal preference. Sometimes you might see me refining my zone, maybe only the week. I might decide to select only the week as my order block. Why am I selecting the week? The week is a hidden zone, and I think I've talked about hidden zone, but I would advise, in order not to miss a trade, maybe refining it to the last candle before this institutional move will be the best thing to do, making sure you include this week right here. And this is a high probability order block as well. Why? We have price sweeping liquidity underneath this low. So price sweeping liquidity underneath this low has now improved the probability of this order block playing out. And believe me, how we trade order blocks is very simple. Now you've been able to identify the trend, you've been able to identify your order block. What are you going to do next? The next thing you do is just to wait for the retest of this level, but it doesn't end here. We have order confluence, and as we continue with the lessons, I'm going to cover that. So this is how we identify order blocks in our lessons, and I can see we equally have another order block right here. This is an institutional candle pushing to the downside, leaving some inefficiencies, and this is another block right here. And you see price came back for mitigation but spikes above the order block. So this is why I'm very careful while marking my order blocks. You see me including the highs while marking my order block. So I mark my order blocks in form of zones, more like a supply level or a demand level. That's how I mark my order block. So let's continue with the lesson. I believe these examples have helped you understand what the market trend looks like and what an order block looks like. Now, someone is going to ask me, what's the difference between order blocks and supply and demand zones? Supply and demand levels are almost the same thing with order block. For me, I would say they are just the same. The difference is just the terms we use. And another thing is when it comes to supply and demand zones, we have what we call a range created supply and demand zone, and we have what we call a pivot created supply and demand zone. So for the pivot created supply and demand zone, that pivot is what we call the order blocks, because in that case, we are looking for a single candle. But for supply and demand zones, we look for a range. That is where we have series of candles before that institutional move, just like what we see right here. This particular example we have right here is more like that range created supply zone, because we have series of candle before that institutional move to the downside. So this is a range created zone, a range created supply level. But when we want to trade, we might decide to select only the order block. This is why we might decide to select the last opposing candle before that move. Okay, that's why you see me, I select mostly supply and demand levels, because it helps me be on the safer side. Now in this particular case, this is also a range created demand, because the whole of this range is what we call your demand zone. But you can look to maybe refine and select only the order block. This is where you look to drop to the lower time frame, or maybe selecting only one particular candle, right? I believe this makes sense to you. Let's see the examples. I've spent a lot of time explaining only this concept. So let's see. So the very first example we'll be covering today is AUDCAD. Yeah, this AUDCAD, and it's going to be on the 1 hour time frame. So this was the setup when it was shared. It's a new setup when I shared to the community. And this was the levels, and I believe the things I'm explaining, you can clearly see it right here. So this was what I explained to them. I said mitigation during ASEAN session. So I shared the setup, and we're actually waiting for price to get to the level before we take the trade. But price mitigates this level during ASEAN session, and I trade two major sessions, the London and the New York. So that's why I dropped the note. I said the mitigation was during ASEAN session, but I will enter from the equilibrium level in 30 minutes. So London session was about to open in the next 30 minutes. So that's why I said I'll be getting involved in 30 minutes. Once London opens, I'm going to get involved in this particular trade from the equilibrium level, because price was around the equilibrium level, and lower time frame confirmation will be valid as well. And going to the lower time frame to spot your entry confirmations will be very valid. So let's see this particular one. This is the first example, AUDCAD, the 1 hour time frame. So this AUDCAD, the 1 hour time frame. Don't forget, what we're covering today is trend continuation using order blocks. I already showed you how to identify your trend. I said when price prints series of higher highs and higher lows, price is in an uptrend. And if I try to zoom out right now, what can you see? Price is clearly in an uptrend. Hope you can see. If you don't want to read the higher highs and higher lows, which is very necessary, you can just use maybe a single line to see the trend. So when you see maybe price reacting this way, you know that you're in an uptrend. Okay, maybe you can use your line if you want easy identification of trends, but I always advise you read your higher highs and higher lows. It's going to help you understand when trend is about to reverse. So seeing this right now has already helped me understand, okay, the trend is bullish, and the best thing to do right now is to trade from an order block, which is a bullish order block, because you'll be entering from there and looking to continue with the overall trend. Now, let's look at other confluence, because you don't just identify the trend, identify another block and trade. No, it's not done that way. You have to identify other smart money concepts that is going to make this a high probability trade opportunity. And this is what I'm going to explain now. So I said to identify another block, you need to see an institutional candle that broke structure, and what you're going to mark is the last opposing candle before that institutional move. And if you look down here, we have an institutional candle that leaves it an inefficiency. We have another one right here, but this is the most recent one. So this is another thing smart money traders do. Once they mark a zone and price doesn't come back to the level, they don't think about any other thing. They just wait till edge is waiting for price to come back. Now note, once you mark a level and price moves far away from there, move on from the setup and try to identify new opportunities. Don't sleep on one setup, okay? If you're not too sure of that, you can maybe look for a different pair and move on. Now, this is the institutional candle that left some inefficiency. This is very clear. And this is the point you have to identify the order block you're going to trade from. Now, where is your order block? This is the last opposing candle. As a matter of fact, this big bearish candle was an opposing candle. We have another one right here, which is the last opposing candle before the institutional move. And another important thing I said is that institutional move should be able to break structure. So at this particular point, you'll be able to identify the order block, institutional candle, break of structure. And another thing is that this order block is also valid because it swept liquidity underneath this low. You see these two candles, price react to the downside, taking the liquidity we have underneath the low. So this makes it a high probability order block. Sometimes when you look at my chart, I might not really mark all these things. I might just mark only the order block and the inducements. That's all. But since I'm teaching, I need to explain all that. So if you're confused, you understand. Now, what made this order block a valid order block and a high probability order block? This is what makes it valid. Over here, we have equal lows right here. Although when I marked my zone, price didn't print equal lows. I had only this low. We had only the inducement area, but I was very sure that price was going to print another low right here. I was very sure of that because this is my inducement area. So most times I call it a smart money trap. I call it an SMC trap. Okay, this is a smart money trap. Now, having this alone has now made this a high probability setup, and it meets the criteria we need as traders. Now, another important thing I do while looking for trade opportunities is the sessions I get involved in. I get involved in my trade opportunity during London and New York session. So if price mitigates my level during ASEAN session, I don't look to get involved. I might use other entry techniques to get involved during London and New York. So let's press price forward and see how price reacts. Now you see price returns after it swept the liquidity underneath this low, returns to mitigate our zone. Now, since price was mitigating our zone during the ASEAN session, I didn't look to get involved. I had to wait for some other confirmations and for London Open to get involved. So let's see the 30 minutes time frame because I finally got involved from a 30 minutes zone. So on the 1 hour, this is the other block we have on the 1 hour, but we have a more clearer zone on the 30 minutes time frame. Let's see. And remember, I said there are many ways you can decide to refine your zone. So in this particular case, I did another refinement where I selected this bullish candle right here. I selected the bullish candle as my order block. And as you can see, price already mitigates the level, but that's not the major thing. The major thing is me getting involved in this particular market. And you see, around this particular area, around 8 a.m. GMT plus 1, this was when I got involved. Now, let's talk about entry. Entry confirmation is something very important. I think last month I dropped an update on entry. So let's look for lower time frame entry on this particular pair in case you want to get involved, because I said to them that getting the lower time frame confirmation is actually very valid if you want to trade this thing as well. But truth be told, I didn't enter this trade with an entry confirmation. Immediately London session opened, I just pulled the trigger. I entered my trade immediately. I didn't wait for any lower time frame confirmation. That's just the truth. Let's see the 5 minutes time frame for entry. So here is the 5 minutes time frame, and you can clearly see, let me zoom in. Price has now mitigated our level, and all we have to do right now is to wait for price to offer an entry confirmation. And how are you going to do that? You're going to do that when you see a shift in market structure. Just like I explained, we need to see price shifting in need structure on the lower time frame, which is going to help you trade in line with the new trend. So that was why I helped you understand how to identify a change in the trend of the market, which I called market structure shift or change of character. So when you see a change of character or a market structure shift, this confirms that we're possibly going to see a change in the trend of the market. So playing price forward right now. Now, another thing we can clearly see is that price is actually ranging around this area. So I really understand why price is ranging around here. This is the ASEAN session. So price is allowed to range, okay? Price is allowed to range during ASEAN session. And this was exactly where London opened. At this particular candle, this was where I entered my trade. I pulled the trigger immediately. This candle was printed because this candle swept the liquidity we had underneath this low. And this was exactly immediately London open. This is actually the London session strategy. I think I've taught this strategy 2 years ago on this channel, although I stopped trading it because it stopped presenting itself in the market there. But let's place price forward. Price is now reacting to the upside, but we need to confirm the shift. So this is price shifting in structure over here, and this is where we have the entry. Now, someone is going to say, how is this the shift? If you mark it out, this is price reacting to the downside actually. And you can agree with me, this is price printing your lower highs and lower lows. Let's try to read the structure. This is your lower low, right? This is your lower high. Price reacts to the downside, break structure to the downside, right? So this is your lower low right here. We had this pullback. After the pullback, price reacts to the downside again. This is the pullback right here, and we have the reaction to the downside. Now we have another pullback which spiked above this high. So this is what I was saying, that before this can be a valid market structure shift over here, price has to close above the high, but it didn't close above the high. What do we see? It reversed to the downside again, didn't close above this low. Then we had another pullback here before price finally closed underneath this low. So this was a lower high right here. This is a lower low. We had this pullback right here, which is still a lower high before price reacted to the downside, forming a new lower low. So after price formed the lower low, which is where the liquidity underneath this low reacting to the upside, this is where we have a valid shift in the structure of the market, because this particular price moved and closed above this high. I hope you can see, moved and closed above this particular high. So this is a valid market structure shift. Now, based on the entry technique I explained, we used to get involved from the extreme level we have over here. But in this case, I explained something different. I said you should enter from the breaker zone. So this particular level right here is your breaker zone. I said, once price shift in structure, identify the next supply level, because price is in downtrend. So you need to identify the next supply level. So this is the next supply level. Price came back for the retest, and now we have an entry. Price starts to move away. So let's go to the higher time frame. So price mitigates our level and starts to react. And where was my profit target? I took my profit around this particular high, around this area, because I got involved from the lower time frame. So the one I shared in the community was around here, but personally I took my profit around this area, and price starts to react. So immediately price reacts from there and hits my target. This is very easy, and I hope this is very clear. But if you have a question, you can go ahead and ask. I'm always available to take your questions. So let's see another example. The next one we'll be looking at is on AUDNZD. So let's see that in the community. So here's the second example is on AUDNZD on the 2 hours time frame. So I'm going to use this as a second example, and this was the setup when it was shared. And I said not my kind of setup, but it's valid. So I'm actually going to tell you why this is not my kind of setup. I'm going to tell you that, but this was when price was already reacting. So let's see this example on the chart. But before that, let me introduce our mentorship. Advanced Smart Money Mentorship is still running. If you want to enroll, this mentorship costs $216. And once you enroll, you're going to have a lifetime access. We have an advanced smart money course. So if you want to be trading with smart money strategies, we have the advanced course, which is going to help you elevate your trading style and understand the markets. Weekly chart breakdown. I come live every week to break down charts with my VIP students. You're going to have access to a VIP support group. So the community have been sharing those examples from, that's our support group, and that's our VIP group. So you're going to have access to join the group, and you're going to have access to our chat group where you communicate with other students. Premium possible setups. We share trade opportunities every week, and we usually have weekly Zoom meetings. So if you want to enroll, you can click on enroll now, and you can as well pay there. And these are some of the reviews from our students. You can visit our website to make payments and join this mentorship. If you think you need mentorship or you need community of traders, you can look to join us today. But if you think you are doing totally fine on your own, kudos to you, and you can continue doing that. But if you need a community, you can join. This community is open, and we are ready to welcome you. Back to the lesson. So here is the second example where I'll be showing you how to trade with the trend, that is trend continuation, using order blocks. Do I need to tell you anything? By just looking at this, you already know the trend of the market. And I said to easily identify this, you can use your tool, that is your line tool and just mark it. Once you see your charts like this, it means that price is currently trending down. Okay. Although we had a little uptrend here, we had a shift, price continued lower. So that's why I said reading it as higher highs and higher lows will make more sense and to actually help you understand your market better. So this particular one, when I shared it, I said not my kind of setup, but it was valid. We got involved, we made money from the setup. So over here, this price reacting to the downside, and I said, how do you identify your order block? Very, very simple. Other blocks are identified when we have the last opposing candle before an institutional move to the downside or to the opposite direction. So in this case, we are looking for a bearish order block. This is your institutional candle moving rapidly to the downside. This is where we have your price inefficiency, and from what you can see, we had to break of this low. Price broke this low while reacting with your institutional candles that left inefficiencies. And at this point, this is where you can look to identify your order block. The truth is that we have a range created demand zone. So talking about zones, this is a range created demand zone, but we could look to do some refinements in this case because you can see we have this small candle right here, and you see it was after this bullish candle we had this bearish candle before momentum kicked into the market. So you could look to do some refinements, maybe refining your candle to something like this, or you go to a different time frame to do a perfect refinement. But truth be told, this was how I sent the trade opportunity to the students, something like this. I marked my level, something like this, when I shared it to the community. So we had other confluence that made this a high probability setup. Price equally left a liquidity inducement area. This high right here is your inducement area, and this makes this a very, very high probability trade opportunity. Now, playing price forward to see how price returns to this level, because this particular one, no need for much explanation. The previous explanations is going to help you understand this particular one better. I forgot to explain why I said this is not my kind of setup. Now, I said this is not my kind of setup because usually I trade from extreme zone. So let's measure with a Fibonacci 2. So from the Fib 2, if you measure from the high to the low, you're going to notice something. This green line we have right here is your equilibrium level, and the zone is actually a valid setup. But most times when I trade my zones, I look to trade the zones at the extreme levels. Okay, the zones as the extreme levels as giving more results, and this is the premium level, and I like trading the zones at the premium level as the market is bearish. But in this particular case, this zone is very close to the equilibrium level. So that's why I said not my kind of setup. But was it valid? Yes, it was valid. But you know, I've been trading to a point where if I see my setup, I know my setup. So this was not the kind of setup I usually trade. If you visit my social platforms, you will notice that all the setups I trade, they looks exactly like the same. Okay, they have similar patterns. If you don't look closely, you think I'm sharing the same setup, but they are not the same. I'm just trading similar patterns and I'm already used to that. Okay, so let's press price forward right now and see how price returns. You see price continuing to lower, break structure to the downside. Now, so let's see how it returns. Price came back, mitigates our level, and we have almost zero drawdown, right? We had almost zero drawdown and price moved away. So it's actually a very good trade opportunity, which offered over 6%. Price moved away, and this is the current price action now. So I believe these two examples have explained this concept, understanding the trend. Secondly, selecting your order blocks. Let me show you the last example, the last one. So this particular one is going to be a student results, and I've always shared this guy's results. I think sometime last year, I was teaching with some of his results, but sometime I've not really done that. So it's going to be on EURJPY, EJ, flexibility. I've talked about him before using his setups. So this was the one on EURJPY. This was the setup when it was shared. And this is when he got to his profit target. He says he goes for 2% actually. But let me find the setup when it was shared. Give me some time. So this was the setups. He shared 3 setups, right? He shared the first one on AUDCAD, which was the first one I used as the example. So to tell you that I see similar things with my students. We see similar things. As a matter of fact, 80% of my students, when they share their trade opportunity, it looks exactly like what I trade. So this is the particular one we're going to use, and this particular one, CAD JPY, but let's look at EURJPY. As a matter of fact, these three setups played out, and it's actually a good one for him where he made money from the market. So EURJPY 30 minutes time frame. So we're going to look at EURJPY, and this particular one I can see is a very good one. So let's see it quickly. So this is EURJPY, the 30 minutes time frame. So in this particular one, at first, price was bullish, right? Price was bullish, printing your higher highs and lower lows. I already explained how you can identify that. Now, at this particular point, we see price shifting in its structure at around this particular area, price breaking underneath this particular low. So, and not only that, to tell you that this is valid, price also broke an internal structure when we had that institutional move. So, looking at this trade opportunity, the next thing to do now that you've identified that price is actually shifting in its trend is identifying your valid order block. Now, where is your order block? This institutional candle dropping to the downside. You see, 1, 2 very large candles dropping to the downside. And how do you select your order block? You select your order block by marking the last opposing candle before an institutional move. So this particular one is actually very, very clear when it comes to selecting an order block, okay? The last opposing candle before an institutional move. So this is a valid one. If other examples are not actually clear to you, this one right here is very clear and you should understand that. Now, how do we know that this is a high probability trade opportunity? Over here, you can clearly see that price sweeps liquidity above this particular high. I hope you can see that. Not only that, we have the mitigation of this particular level, which explains that the order flow is bearish. Okay, now we have a bearish order flow in this case. Not only that, price builds liquidity. I hope you can see this equal highs right here. This is a build of liquidity. So seeing this right now explains that this is a valid trade opportunity. So spotting this is very simple. All you have to do right now is play price forward and see how price reacts. Price moves immediately, mitigates the level and drops to the downside, and he made money from this particular market. Very, very easy. So I believe this lesson has helped you to understand how to trade with the trend and selecting the valid order block. I believe it was helpful as well. So thanks very much for watching this particular one. If you're new to the channel, consider subscribing to the channel. And Solomon Wisdom, and here is Born to Trade. So thanks very much and see you in the next lesson.